One of you guys sent over this article that analysts are predicting falling real estate prices all over the world in 2023. The article doesn't mention who these analysts are, seems pretty legit to me already, but it's likely that they are referring to the study from Goldman Sachs that also predicts falling property prices. Goldman thinks that this is because of the rising interest rates for mortgages. And since that is the article's argument as well, we think that is the original source. Anyway, let's say it's true and global real estate prices will go down next year. What does that mean for German real estate prices? I'll give you my answer in this GermanReal.Estate blog. The major argument of Goldman seems to be that interest rates are rising all over the world. And it's true. Our European Central Bank increased their key interest rate from 0 to 1.25% this year, and the Federal Reserve increased their federal funds rate to 3.25% this year. The higher the interest rates from central banks around the world, the higher also the interest rates people have to pay when getting a mortgage. You can see the massive impact central bank decisions have in this mortgage rate chart. German mortgage rates increased from about 0.5% last year to almost 4% as of shooting this video. That is an 8 times increase. And the higher the mortgage rate, the lower the real estate prices, generally speaking. Because it gets more and more expensive to buy a property, so people can afford less. Simple economics. People taking a mortgage hate it, people lending money love it. Our investors and our real estate security tokens love the rising interest rate because they get more and more money. Check out our website GermanReal.Estate to see how much interest rate our real estate security tokens are currently paying out. A €100,000 property with 0.5% mortgage rate costs you €208 a month and €11,600 interest in total. 100,000 loan with a 4% interest rate costs you more than twice as much, €500 a month, which equals to more than €65,000 in total interest until the loan is paid off. Over €50,000 more in interest is a pretty significant difference if we're talking about a €100,000 loan. Am I right? So yes, in this regard, I agree. Real estate prices go up in a low interest rate environment and go down in a high interest rate environment. Generally speaking, interest goes up, interest goes down, but who is affected by this really? People that want to get a mortgage now or people that have to refinance now. And that's where Goldman says that especially Britain has a problem as they apparently fixed their mortgage rates for 5 years only. Meaning until July next year, around 40% of Brits face higher interest rates than today, estimated by the Bank of England. Oopsie daisy. Here in Germany, the situation is a lot different because we fix mortgage rates for usually 10, 15 or 20 years. And people that got a mortgage 10, 15 or 20 years ago also had mortgage rates of at least 3%. So not much of a difference, to be honest. And there are a lot more factors influencing real estate prices than just the interest rate. It's one factor, yes, but there are at least 4 major factors to consider when trying to predict future real estate prices. What about people's income? If incomes would skyrocket, people could pay higher mortgage rates easy, right? Right. It just doesn't look like it right now with the high inflation, energy prices and all that. So those are the 2 factors supporting Goldman that there will be falling real estate prices next year, or even a crash for that matter. But wait, there's more. What about the demographics of a country? If the population keeps growing and growing, the demand for living space keeps growing accordingly. And property prices with it. And lastly, how many properties are actually being built? The average lifespan of a property is about 100 years. After that, you need to modernize or demolish it and construct a new property. And that's why Germany needs to build at least 400,000 flats each year, which we don't. Last year we built just 300,000 flats, so 100,000 flats short. And over the last 10 years, we're an estimated 1.5 million flats short. This is why rents have been exploding, especially in the top 7 German cities. Those are the 2 factors supporting that the German real estate market will continue to be strong and property prices will keep growing. Check out both videos if you want to make up your own opinion in this debate. Both are linked in the description. I can only say one thing. Nobody has a glass ball and is a prophet that knows exactly what will happen to real estate prices next year. Neither me, nor you, nor anybody else. And since nobody knows the future, why the would anybody try to time the market? Any market, stock market, real estate market, it doesn't matter. It's just speculation. You may be right, you may be wrong. That doesn't mean you're smarter than anybody else, can also be luck. So stop gambling by trying to time the markets and start thinking strategically. Which type of property makes sense in which location, given your personal financial strategy? And that's what you can select as easily as possible on our GermanReal.Estate marketplace. Here you can invest in real estate security tokens from professional property developers that build great properties in great locations. And if the experts don't try to time the market, why would you do it? And that's, by the way, what Goldman finds for the US market and Deutsche Bank finds for the German real estate market as well. Maybe there will be a little hiccup and a small price decrease over the short term, but over the long term, you will be fine with a strategically great property. So why don't you hop over to our website GermanReal.Estate and see what kind of real estate security tokens are currently available.